Good morning. How are we feeling today, Stocktwits Nation? Shy, good morning. It has been a 24 hours, to say the least.
Yeah, I woke up just still yesterday felt like a dream. My portfolio, some of the holdings I had, it felt like video game numbers. I think like 20% of my holdings were up over like 22%. And that's just like seeing Nvidia up 18% and seeing all these like big tech companies just like up that much. It feels like some kind of dream, but it was a reality yesterday. It's nice to see. And today is probably gonna be some profit taking. Clearly, you're seeing the pre-market red.
Yeah, we're going to get into sort of your portfolio, some of the moves you made. But let's quickly recap what happened in case you were under a rock or perhaps on your way to the Masters or just not looking. So, Trump paused tariffs on most countries. This happened about midday. If you were watching the show yesterday, Shy and I were live reacting to the tweets in real time. Nobody knew it was going on when he was saying things like "be cool." Apparently, there was things happening in the background. Just like that, once the announcement happened, stocks ripped, just like they sort of signaled when our buddy, a non account Walter Bloomberg, tweeted the news out preemptively earlier in the week. Stocks shot up a bit. And what happened was, despite China facing a 125% rate, the market went full risk on. So, ignoring tariff hikes like the ones on Canada, Mexico, and the EU, all S&P sectors, all 11 of those closed green. Tech led, as Shai mentioned, up 24%. Real estate lagged, up 2%. And the indices soared. The S&P up 9.52%. It's over 5,000. NASDAQ up 12%. The Russell 2000 up 8.66%. And the Dow up 7.87% as we head into the pre-market. And wow, it was a crazy day. As you watch a lot of people who have been in the market for a while, decades, many of them saying this was the craziest thing they've seen, at least up there. So Trump's midday post triggered one of the greatest single day rallies ever. Apple had the best day since 1998. The Dow, largest one-day point gain in history. The S&P 500 added $4.3 trillion in market cap, and semis had the best day ever for the Philly Semi Index. Shai, looking at those points, looking at your portfolio, what did you see happen yesterday after this news broke?
So, I mean, yesterday I told my fiance this and my buddies. I don't think I'll ever have as good of a day in the rest of my life as I did yesterday financially for my portfolio performance. Like going up 16% in one day is something just absolutely insane, and why time horizon is everything. I'm not a great market timer. I've been very vocal about that. Like finding a bottom or a top, that's just not my edge. My edge has always been finding early stage disruptors and secular growth trends, like companies who actually have a moat and they can capitalize on it by the theme, just high tide resolve boats. So when we the past couple of weeks when the QQQ has gone down like 20 something percent, entering a bear market from all time highs within 8 weeks, I was just I was DCing. Like that's what I know. Like I know that we're gonna come out of this eventually, and when we do, these winners are going to be the clear disruptors in the fourth industrial revolution that have a mode and pricing power, and I'm confident in the long run. So I was adding, and I went from an 18% cash position to down to a 5%, and I was just slowly DCing, and luckily that's my style, and I'm able to participate on days like yesterday. But if you're not like that and you go in and out of the market, you're a trader or maybe even a catalyst trader, you got blown up a bit yesterday because the clear trend was down, and it was justified because the global trade policy was getting uprooted for the first time in decades, and there wasn't a roadmap on how to recover from it. And technically speaking, it was ugly. So it made sense to be short, but that was always the biggest fear in this environment where you've seen fake headlines like the Bloomberg one talked about 2 days ago. Like that one tweet can move trillions of dollars in the market. Imagine if we had one tweet from Trump, who it wasn't a rumor, it was actual proof of something's changing. We'd have a face melting rally in a matter of minutes. That's exactly what happened yesterday. Like I know someone who literally was off the screen for like an hour or two yesterday just because I was actually doing his work. He was positioned incorrectly, and all of a sudden, 2 hours later, he got blown up. His portfolio performance, he was red, and he didn't participate in the rally because it didn't wait for everyone to get in. Like it just ran. So that was I feel like that's a lot of people yesterday. I really do. So I think that day in, day out, DCing, add when it's ugly, hold when it's quiet, ignore the noise. That's my strategy. And you get days like yesterday, and having a long term time horizon does work out. Like I really do. I'm very part of that camp where buy and hold is the way to go if you find those early disruptors and let it just grow into your thesis and let the market figure itself out.
Yeah, yesterday was such a fascinating snapshot in time. I hadn't even opened. I have all of my stuff in one account that I don't really. I'm like you, Shy. I don't really touch it that much. I like learning about and talking about these things, but I'm not moving things around day to day. I opened it yesterday because I was like, oh, let's see, and I was like, oh, but then I clicked out to year to date, and I was like, oh. So that was the the single day snapshot for a long term investor. You're like, all right, cool, signs of life. And then I zoomed back out and I was like, oh, okay, we still got to claw a little bit here. But I think you bring up an interesting point on just the real time nature of everything. And like, it's pretty standard that if you are not a day trader and not able to be at your screen, as you say, all day, you can miss news. But that has never been more true. And I think when you have people, most of us have day jobs. You and I both went off and we were doing other things, and then we see what's going on. So it's advantageous to be someone who is locked in all the time. But even if you were locked in all day, I mean, that kind of came out of nowhere. In hindsight, he told us, uh, but at the time, it's that kind of unpredictability in a spokesperson. You don't really know what to play. I think I'm interested in now what happens, and I'm interested how you're thinking, Shy. Are you expecting? Yesterday was probably one of your best days ever for gains. You expecting today profit taking pullback? Do you think that was the low?
So I mean, if you missed yesterday's big move, I wouldn't chase today. Clearly, even if we're down 2% in the Qs this morning, like this is not a start of a new trend. Yesterday was purely a pressure valve releasing, and it caused the QQ to go up 12%, SPY 11%. Like, but don't get it confused. Like, we're technically still in a downtrend. Structurally, nothing has changed. Trump's tone changed, and he kind of provided somewhat of a strategic roadmap, if you want to call it that. It's better than just doing something blindly and making up calculus, but it's somewhat of a sandbox we can operate it in. But fundamentally, we're still flying blind, guys. Like the macro fog is still there, and we need to get clarity on tariffs with China. This whole thing is China, China, China. So I don't think this is a conviction rally. I do think yesterday was more of a reaction. It was a mechanical move off of extreme oversold levels. And I think everyone is still going to be looking over their shoulder. And this is something that you can say the easy money was made because it was up 12% yesterday and it was oversold nature. But now it's all right. We have to actually figure out how to get out of this environment. And unfortunately, the headlines are going to the headlines are going to have more weight than the actual fundamentals this earnings cycle. You're going to see this earnings cycle actually be somewhat of a dud where there's going to be no guidance. CEOs are just going to be dodging the questions left and right. They're going to be extremely vague, and that's going to keep the market frozen. So we're going to be somewhat trend setting, and right now we're still in a downtrend cycle. And I just don't want people confusing narrative following price action where we're still not in the clear, and I think we're just not oversold yet. We still got ways to go above that 200-day moving average. So be cautious, be liquid. Don't confuse this bounce with the breakouts. But when the storm passes, which it will, build a list of which companies you want to get exposure in, who you think will be the leaders of the fourth industrial revolution. Because when we do start running, we're gonna run with velocity if there's some kind of arrangement with China and the US. So be prepared.
Yeah, I think you nailed it. There was this a universal pause because it was all-encompassing tariffs, but China was really the target, and some would argue was all along. And it now you almost need to make a little bit of a more detailed assessment as you're looking at companies. In the, looking back last week, there was people assessing who had manufacturing units in Vietnam and Cambodia and Europe, and now that seemed to fall away a little bit. It's still sort of there, but now it's the China situation. I know Amazon had, before yesterday's news broke, had talked about pausing some imports from China. So there's still companies that need to figure this out ahead of potential deal with China or things escalating further. But I think you made a good point that, as you've been saying all week, now is the time to really see where your conviction lies. And there's really no better time to know when you have conviction than when things are really red. I think even looking at the last week, Shay, like the things you really believed in, it didn't really change despite everything going on. And I think that's a good sort of mental model for people as they're looking at their portfolio. Like, what are the things that even when the sky's falling down, you still believe in those? And you've talked about some of those.
100%.
Yeah, you talked about some of those names in the past. What are some of those for you, for people who might be tuning in for the first time?
Yeah, so I think when I look for a characteristic in a stock, I care a lot about a moat, a competitive advantage. And I know people care a lot more about valuation fundamentals, like, oh, how overvalued, how undervalued. I think it's really tricky to dictate future growth winners based on traditional metrics right now. Nobody knows the ceiling on AI. Nobody knows the ceiling on quantum. Nobody knows how big space economy is going to get. So why are you trying to price those early disruptors based on traditional metrics right now when you don't even know what the pieces on the board are going to be in 5 years? It does not make sense. So what I care most about are traits of a company. Can the product scale? How sticky is their ecosystem? Do they have a logistics network that creates a high barrier of entry for competitors? And if we're in a tough environment, do they have the pricing power to raise because they're handcuffing all their clients where like they're forced to use them? Like Amazon, like if they raise Amazon Prime membership $2, I don't think people will cancel. But that's a 20% increase on the top line on just that one leg of their business. That's a mo. Same thing with Snowflake. Snowflake has 40% of the Fortune 2000 data into their ecosystem. It takes 12 to 18 months to migrate your data out of it. Are people going to, if you're a CIO, CTO, are you going to handcuff your organizational growth for a year because there's a little better product out there that has a different angle, like Databricks? No, you're just going to be in the ecosystem of Snowflake, and you're hoping Snowflake can provide the AI offerings that their competitors are, and they're probably going to. So you're going to stay in. That's a sticky ecosystem. CrowdStrike stopped the world for hours. 97% retention rate, 3% churn when they had the biggest F of I can remember in quite some time. They have a sticky ecosystem. They have the best endpoint product out there. This was an admin related error on that outage, but people didn't leave. So now I think they're the same level as their pre-outage a year ago. And this is after this correction we just had. That's what a competitive advantage and moat offers. It just, the best is always going to be priced the best. The market's going to send a premium valuation to them. They're never going to look cheap. And the stocks that do look fundamentally cheap, there's a reason for it. The market's not dumb. Like, it's going to be pricing a stock because if it's undervalued, because the thesis is cracking, their product might be a commodity, that industry, that growth in that secular trend that they're in is pretty minimal, and maybe it's maturing. There's a lot of factors at play. That's semantic. That's kind of what I look for in this market correction we've been in, where I'm repositioning my portfolio to those early secular growth trends that I think have the greatest runway. And I'm not caring much about fundamentals. It's nice to know, but I'm care about all their competitive advantage, how much they can compete with their competitors, high barrier of entry, and their moat. And if they have a monopoly or a duopoly, that's kind of my thing, my bread and butter. I love those names, and I position accordingly to that.
Yeah, we've been talking a lot about just cybersecurity as being such a durable industry because it's a business necessity. And I was reflecting on yesterday because historically, when I think of cybersecurity, I think of like direct hacks into systems to either extort or steal money. But you saw yesterday what can happen financially if there is a hack or some sort of breach just at the level of communication, of someone with a big audience being able to share something and there being a financial opportunity on the other side of that that's actually disconnected from actually hacking into anything financially. And so that yesterday to me was sort of a light bulb moment too, just the importance of not just protecting data and systems and financial information, but also just the pathways to spread information from some of these large platforms, accounts, media companies, because we saw what can happen yesterday when someone with a big platform, or even when that FinTwit account, Walter Bloomberg tweeted. So I think that piece too is just, that's going to be something to watch, because I think I saw that and I was like, oh, that someone's going to try to abuse that.
Totally. I mean, I liked. I have 5 names that I own. That I call the new age of defense. So that's, I do believe, like, cybersecurity. I reposition a lot of my DCA towards that new age of defense bucket I call, because it's a combination of being able to be defensive in the market and also growth. Like, those two things are synergizing in cybersecurity theme, where there's an early secular growth theme with a ton of runway, but it's also the stickiest component of any IT budget. So if we're in a recessionary environment, that's going to be kind of the last lever that the CIOs and CTOs will pull in their enterprise. So that's the defense component of, like, why I feel somewhat safe adding, when there's blood in the water, into those kind of names. And agentic AI has barely started. It's going to accelerate, especially if cost of goods are going to increase, and I think a lot of, like, the inflation might be stickier. Whatever outcome from this tariff wars are going to be, they're going to enterprises are going to look for levers they can pull to expand their margins without having to be at the cost of the customers, and that's AI agents being able to do the stuff that FTEs have been doing. So I think agentic AI is going to be exploding next year or two, and I think people are violently underestimating how much data is going to be consumed now because of these AI agents. It's just going to be an insane 24/7 cycle of data incrementally increasing and increasing. And what does that do? It's going to require a lot more queries to pull that data every single day. Every day, just the data stacks on to one another. Doesn't replace it. It just adds to the stack. What do you have to do with that data? You have to protect it. And you mentioned, like, eyeballs. Like, I do view eyeballs as similar to data liquidity. Nobody really talks about data liquidity in the future we're about to enter, where you have to be able to transfer data from user to enterprise with no latency. It's be seamless, efficient, quick. You also need, because of how quickly it needs to be transferred, you have to make sure it transfers effectively and with the right parameters of defense to secure that data. So data security is going to be a huge, huge theme. And that's why I just feel like this pullback gave you the opportunity to add some of these, like, tier one names that really don't pull back that much. But we got that opportunity because of this high stakes poker game. So I think if you don't have cybersecurity exposure, you hope we retrace this move from yesterday, at least 50% of it, and get some, because that's one theme that has legs and it's somewhat of a high floor and safety that I think everyone needs to have exposure in.
Yeah, you briefly mentioned inflation. We got some new inflation numbers actually a few moments ago, 8:30 a.m. Inflation actually cooling a bit despite all of the tariff talk. March CPI falls 2.4%. That was below expectations slightly of 2.5%. Core CPI falling to 2.8%. And that was below expectations of 3.0%. And this is the second straight monthly decline in both headline and core CPI. So that's good news. Potentially a signal for the Fed to play with. Although if I'm the Fed right now, I really don't know. I'm sure they're having lots of meetings and figuring out what the move is. Shay, any thoughts on these inflation trends? Are or any impact on what you might do in your portfolio?
No impact on my portfolio, but I think this good news is bad news for the market, if that makes sense, because it's cooling. We're seeing signs of that. Why should the Fed or Trump change courses then? Like they're getting what they want with the cooling inflation. Just keep interest rates higher for longer. Like why should the Fed cut rates?
Yeah.
This trade wars that we're in for Trump, why would he buck that when it's not causing inflation? From this print, it's cooling it. So I do believe we're in this environment where good prints like this cooling data is actually going to be reacted poorly from the market because they don't like trade wars. They don't like high interest rates. And the CPI just essentially gave the green light for both the Fed and Trump. Continue what you're doing. We're not seeing any kind of explosion in data right now.
Yeah, it'd be interesting to see because Trump wanted the Fed to make some moves, but now that this data is out too, it kind of loses a little leverage with that. Yesterday we were lamenting that we wanted to talk about individual headlines and stocks a bit more, but we were sort of locked into the current event that we were all living through. But today, I feel like we have some bandwidth today, and so I spotted your tweet earlier this morning, Shy, on Taiwan Semiconductor. They reported a revenue surge. What are you seeing over there with them? I also spotted some news of a potential special tariff on them, or a fee rather, for not producing in the U.S. But what did you see in those Q1 numbers that stood out to you?
So they made some, first off, 42% year-over-year growth is pretty incredible. I think that was the best growth they've had in 3 years. The narrative about it was pre-tariff demand spike to get ahead of what might be coming down the pipe, but they beat by 300 million. That might sound like a lot, but it was estimates were 25.2 bill. They came in at 25.5 bill. It wasn't that much of a beat if there's some kind of vacuum pull on data demand. But either way, TSM, they their geopolitical risk is diminishing every single quarter because they're putting up plants in Arizona, right? They're essentially pairing up with Intel to help out uh, that much of a mess of a company. So I think they're becoming pretty detrimental, pretty important to the American AI vision that Trump has. And the biggest issue for TSM was always, oh, well, what if China invades Taiwan? So they've always had somewhat of a discount because of that geopolitical risk. I think that's diminishing every quarter after quarter. The issue though is, although the whole digital economy relies on TSM because they make the chips for Nvidia, for example, like they're the sole provider of the chips that Nvidia uses. And I don't have to get into the Nvidia. Nvidia is the kingpin of the digital economy. So if TSM's of giving the tools for the kingpin of the digital economy, guess what TSM is? Like they're God essentially. So I think that they're really important. However, if AI hardware is going to be somewhat of a digestion period due to the S curve AI S curve adoption for stage one, because I do think we're somewhat in a digestion period for hardware in the post DeepSeek playbook review because training data is becoming so freaking cheap and it's going to continue becoming cheaper and cheaper, and that is going to result in a digestion period after the last couple of years that AI hardware has had in pricing power. TSM might be somewhat handcuffed from that, and there is cyclical risk associated with that name. However, like I think after this digestion period, nobody knows how long it's going to be. That next leg up is going to be pretty massive, and I think people are also not thinking about the next derivatives of AI is going to be a massive driver for hardware as well, like physical AI or robotics. That has not gotten started. Like humanoids is just still in the if it's a baseball game, it's stretching before batting practice. Like it's so early innings, and that has the chances of becoming the greatest TAM of our generation. Big runway. So I think TSM definitely is a great long-term opportunity. And like this dip that we've gone in the market, it hit the semis the hardest, most vulnerable because it was a deep sea headwind as well as like the Trump tariff war with China, like that hurt semis completely. So they maybe got an opportunity, but I didn't participate in it. But I love this company. It's one of the three names in this ecosystem that has an absolute monopoly on moats. It's Nvidia, TSM, and ASML.
Yeah, Tuesday, Trump said he told them that if they don't build new factories, they might pay a tax up to 100%. And now maybe they know he's not messing around now because he's now shown that he's willing to sort of tank things to get his way and muscle his way into things. So that'll be an interesting to watch. And I also think you brought up an interesting point on just there's a couple of facets of like agentic AI and human AI, which is the hardware side of things and the physical products, but also the brain power and like the news we saw out of Shopify. Shopify putting out a memo to its employees saying, "Hey, if you better figure out how to make AI do some of these things before you ask us to add a headcount." I think that was a real moment. Shopify in the startup ecosystem is held as a company that other companies aspire to be like. They're very known for being very transparent in their communications. When they make moves from like a cultural or like business, how they run the business, other companies tend to follow them. And so I think that is going to be an interesting trend to watch of that trickle down effect of now they've sort of given the green light and who else is gonna go from there and what the impact's gonna be. I do want to shift to Nvidia because let's pull up their stock chart. They got a little boost yesterday, obviously, as everyone else did. But Shy, Nvidia in particular yesterday, this is one of those ones that, to your point, long-term conviction. They hit they hit the same bump in the road as everyone else, and now they're ripping, and now there's some news of a potential tariff exemption for them, particularly that would benefit them.
Yeah, so I think Nvidia's big. There's two camps. Nvidia, you view them as a hardware company. I view them as a full stack AI company. I think yes, their GPU pricing power is going to diminish. That's no secret. It's never going to be 75% always. Like it's probably going to dwindle down to uh, low 60s. But everyone's forgetting about CUDA. CUDA is massive. That's what's key. Like everyone used the NVIDIA GPUs the past 2 years, but the reason they're staying in the NVIDIA ecosystem is because of CUDA, their software offering. And that's always been my biggest argument on AMD is like AMD software sucks, their offerings compared to NVIDIA. It's like not even comparable. And that's something they need to figure out. And when they try to acquire ZT Systems or that server company with that capital, I'm like, that's the dumbest move you could do. That's not why people aren't staying in your ecosystem, wasted capital, but that's a different story. NVIDIA. CUDA is what keeps everyone into their ecosystem. So for me, the reason NVIDIA is getting hit so hard post DeepSeek is, oh shoot, training data is becoming cheaper and cheaper, way more accelerated than we thought that it would be. So now this NVIDIA is printing cash on 75% margins on their GPU hardware business. That's going to go away and it's going to have a margin compression. It's going to cause a re-rating. So that was like, all right, well, I think the inference demand is going to explode due to cheaper AI tools, and that's going to benefit CUDA substantially. The biggest argument, though, with NVIDIA is nobody knows the one-to-one correlation. It's too soon to tell. The headwind of training data versus the tailwind of the inference data. Nobody knows if it's one-to-one. I'm pricing that it's actually going to be closer to one-to-one than people think, and NVIDIA will be fine. But there's part people in the camp that think, no, it's going to be like, it's going to be maybe filling 25 to 40% of the price, the cash they're printing in the hardware business. It's not going to fill that gap. That's the biggest disconnect with NVIDIA right now. You just don't know yet. However, I think seeing what they've done the past couple of years alone in AI, I think they're going to be just fine. And I think that CUDA's also offering a key virtual environment for quantum and robotics to test algorithms, GPUs before deploying them to physical GPUs for quantum, and also like the robotics is going to be a sticky component of the robotics physical AI theme. Just in GCT, you saw it. So yeah, I think NVIDIA is a great option, but the ballot's open. Let's see how it goes.
Yeah, Nvidia. Nvidia also making news. Jensen Huang making a trip to Mar-a-Lago over the weekend, and then potentially some resolution after that. So it shows you it's a different world of just how things are getting done now. It feels very old school, very let's come talk face to face. And you're going to see more and more of that as these business leaders kind of adapt to the new normal. Let's look on over to how we're opening here. We're dropped 500 points. As you mentioned, Shay, we're gonna take some profits here. The Dow's down 1.66%, S&P down a little over 2%, and the Nasdaq down 2.65%. Is this in line with sort of what you were expecting to see, Shay?
Totally. Profit taking, like 100%. Like, we're still in a downtrend, guys. This is exactly what I'm saying. Like, it was not a breakout, this bounce. It's not. So I anticipate some profit taking, and that's nothing wrong with that. I think it's actually kind of smart until we clear this 200-day moving average. Like, we're still in a downtrend. The slopes are moving average is still sloping down, and you got to be cautious. And I'm happy to see it because we're not going to have a V-shaped recovery. There's going to be churn and there's going to be volatility. Be prepared. Have that dry powder ready.
All right. Well, Shay, this has been an awesome catch up with you. We have a guest coming in now, so I'm going to let you get back to adding, researching, doing what you do. Thanks so much for your insights, and we'll see you next time.
Sounds great. See you guys. See you guys
right.
next week.
Okay, now we're bringing back our buddy Russell Starr. Russ, how
now we're bringing
you?
back our buddy Russell.
Pretty good. Things are definitely a little bit chaotic and weird in the markets. Never a dull moment, but I was certainly a lot happier yesterday than I was the day before.
Okay, I think we have let me see if the echo's gone. Is the echo gone? Oh, we're good now. Sorry about that, Russ. You heard that about 3 times, I think. So last time you...
Sorry, all good.
All good. Last time you were here, it was, let's see, the U.S. had just played Canada in hockey, and we got our asses handed to us.
Yep.
Tensions were high. What's the vibe over in Canada now? Are things cooled down a bit? Are people distracted, or how are you guys feeling up there?
We're probably still celebrating the hockey victory just because we like to hang on to the little wins, and we're in the midst of supposedly re-electing the worst government we've ever had, which is really unusual. And then just to make things more interesting, I'm an Albertan by birth. Alberta is literally talking about seceding, and if Alberta leaves Canada, which it's the richest, most lucrative province in Canada, because Carney wins, and they would probably join the States, to be honest with you. It's a really chaotic time. Yeah, no, it's insane.
I completely. So is this a real thing, or is this like California, which like every few weeks?
This is legit. This is legit. So Justin Trudeau's father created this thing called the National Energy Plan 2-3 decades ago, where Alberta had to pay Quebec and Ontario billions every year of their profits from oil and gas. And Alberta's basically just said, we're done. If you're not letting us build pipelines east and west, if you're not letting us build pipelines north and south, already 50% of the population supports seceding. And it's, well, you got, I mean, the numbers don't lie. We had a liberal government for a decade, and Canada is in the worst position it's ever been ever in history, and we might re-elect that same government just with a different leader. So it's
wow.
Yeah.
Alberta about to be a free agent.
Yep.
Up for grabs. Good to know. Honestly, it's so funny, and I feel like the U.S. our news is obviously so U.S. centric. That's kind of our thing. I'm pretty plugged in. I didn't even clock this. I have not even heard a word about this.
Get on X and just look up Danielle Smith. She's the premier of Alberta, and she's going toe to toe with Carney.
Wow. Yeah. Okay. So we have a lot of crypto news to talk about, but one more question on this. They would definitely seek to join another country, or they want to just do their own thing?
Well, my gut tells me that Trump would make large overtures because the oil from Alberta, it's the 3rd or the 4th largest oil basin in the world.
Okay.
And if you're looking at what Trump is trying to do, basically bring everything back to the U.S., what a coup that would be. Here, you can keep all of the bankrupt provinces, and we'll take the one that generates all the revenue. We'll bring all the oil, It probably has strategic metals. Canada has a ton of strategic metals as well, but it's predominantly an oil basin and heavy oil, and you end up with a massive loss for Canada just because of a moronic liberal government, and a massive gain for the U.S.
Fascinating. And maybe the Greenland thing will just move on from that, or maybe it's a two for
Why
one.
not do both?
Uh,
Yeah, do both.
let's get into crypto. I'm excited to catch up with you on the crypto market because I feel like we've all been locked in on the stock market and equities, and
Yep.
crypto's in the background there. And want to get a pulse check from you real quick for people who haven't. You've been on the show a bunch of times, but real quick. You're the CEO of DeFi Technologies. Quickly explain what that is, what you guys do, and then I want to get your take on a bunch of happenings
Yeah.
in the crypto world.
Sure. So DeFi Technologies now is the world's leader in crypto ETFs. A lot of people don't know that. We're also probably one of the most profitable crypto companies in the world. We actually may be the most profitable crypto company in the world. We just released our financials. We did, I think it was 200 million CAD in revenue, 116 million in EBITDA. But if you back out some stock-based compensation and a bonus we paid our trading desk just because they made a huge gain, it would have been closer to like 180 million. And we're trading it around, I don't know, 5 times or 6 times last year's EBITDA. And like I said, we're the guys who have a SUI ETF. We have an Avalanche ETF. Like, basically take a look at everything that you see in the US, add 58 more of them, and those are all trading in Europe, just because obviously the US was so negative crypto for the longest period of time. So we're growing, we're building in the Middle East, we're building in Asia, we're building in Africa. We'll ultimately get to the US once, now that Paul Atkins is in, I think that you're going to see a lot more clarity from the SEC. And obviously in the midst of making an application for a NASDAQ uplist. And if you just saw Galaxy, Galaxies, I think, is a signal to everyone that DeFi will also be able to uplist here very, very shortly.
You mentioned, curious on the profitability front. What do you ascribe that profitability advantage that you all have?
Yeah, well, it only costs us 10 to 15 million US to run the company. And what we do is we stake all our underlying. So as people buy our ETFs, we hedge out and buy like we have the 3rd largest Solana fund in the world. It's hilarious. I watch these. There's a company called HODL, Soul Strategies, that has around 40 or 50 million Solana. We have like 300 million in Solana. And they trade at a higher multiple than we do. It just doesn't make any sense to me. But so someone buys our Solana ETP or ETF, we'll buy the Solana behind it, and then we'll stake it. And so our business is very cheap to run, and consequently, when we bring in AUM or get to $1 billion, we were at close to $1 billion US a few months ago, we make about 8 to 10% yield on that. So if it's 8%, that would be on 100 million, you're making 8 million. On $1 billion, you're making 80 million. So as we grow our AUM, revenues just catapult higher.
Yeah. And I just dropped in the chat, guys. If you have any questions on crypto for us, drop those in the chat and Stocktwits. I'm checking in on that. It's funny. My friend the other day was like, "Why are you texting during the show?" And I'm like, "I'm in the chat. I'm talking to the people.
Talking business.
I'm not texting."
Yep.
But I am really excited to talk to you because I feel like, as I mentioned, like the last few days of the show, we've been kind of locked into the traditional financial systems. I haven't talked to many people in the last couple days who are like living day to day in the crypto world as much. And I'm curious, for someone in your shoes watching the tariff things unfold, what is that like? Is it sort of like, okay, that's over here, but like I'm a crypto person, I'm on my own lane? Or what was sort of the reaction within inner circles of the crypto world as things were unfolding leading up to yesterday, and then yesterday when obviously we saw the market take a turn for the best?
I'm more of a TradFi crypto straddle. So for me, it was everything's going for sale. Like when you see chaos like Trump was creating, chaos equals margin calls, and margin calls equal everything going down. Like US dollar going down, gold going down, Bitcoin going down, just because people are seeking any way to find liquidity. And obviously you saw that reverse very aggressively yesterday. And now you're seeing a little bit of profit taking after that because look, we're still in theoretically a trade war with China. But I think your fundamental crypto enthusiast or OG just knows that this is the future of the United States. It's the future of the globe, and yeah, there's going to be volatility around it. I always use the example of Amazon or the internet. Like if you can at least go back to charts of Amazon or Microsoft or any of the internet companies in their early days, they were volatile. Like they were like all over the place, and that's no different than what you're seeing in the crypto universe now. And so it's look, one thing I can say is your more fundamental crypto enthusiast is hodl at all costs. They just get in, stay long. So I think there's probably some worry in that Bitcoin is only trading at 82, and some worry in that Ethereum sold off, and obviously they're the two bellwethers. But there is a very big light at the end of the tunnel. Just looking at Lutnick, Trump, and what they're looking to do with Bitcoin. Quite frankly, I'm actually shocked that I will be shocked if they haven't been buying crypto. This is the perfect way to do it for that strategic reserve. So let's see how the day unfolds, and never a dull moment. I just sort of plug my nose, and I've been buying everything for the last few days, just on a trade because this isn't going to go on forever, and everything was trading at incredible discounts. Like I think DeFi hit 220 at one point Canadian, so it was crazy.
Yeah, it will be interesting to see the attention shift because there was a lot of attention on like the crypto policy changes and this task force, and then we being like people in the administration, the media, us like shifted all over to the tariff stuff. The tariff stuff gets resolved hopefully eventually, whatever happens after 90 days. Do they go back to that? And I know you mentioned previously that you all are rolling out a strategic reserve ETP linked to the new initiative. What's the significance of this, and how is it driving sentiment among your investors?
Well, we're not there yet with it. We've alluded to the market that we have actually close to 20 products coming here shortly. It's really frustrating because you kind of live in this world where everyone dissects every word you say. So you got to be careful how you say it. And there's always someone on a chat board who's like, oh, he said this and it meant this. And so the reality is we've got a lot of new products coming, and new products equal more AUM. And as our AUM grows, it means more revenue. So I mean, again, I just go back to fundamentals. We guided to, I think, 225 million CAD for next year, and we'll probably do EBITDA of 190-ish around there, 180-ish. But that's assuming no growth. And so people are like, all you have to do is do the math. More products, excitement. Also, people need to realize these cleanses aren't bad for the market. They do happen. It's just this one, you started getting the Ackmans and the ultra powerful actually leaning in. Even on X, I was watching comments where they were like, okay, we get it. We know what you want to do, but you're about to break the entire system. So let's stop.
Yeah.
Right. So, and then of course you've got Powell, who's, I don't even understand. Like the Fed is so far behind the curve. Inflation, you just saw the inflation print the lowest. They should have been cutting by now. But they're just playing chicken with Trump, and Trump's playing chicken with China, and China's playing chicken with Trump. It's just, it's a bunch of kids struggling for the baseball in the sandbox.
Yeah, you got Musk and Navarro. It's a real cat fight. There's a lot happening there. And yeah, it's a distraction. But it is interesting to see when the business world decides to push back and how that unfolds. It's almost like no one wants to jump in the swimming pool first, and then someone said something, and then someone's like, all right, now I can go, now I can go, now I can go. And then you see them lining up. But I think it's a good, some people pointing out, like Josh Brown pointing out, it's pointing back to sort of the innate checks and balances of of the markets. And he mentions on LinkedIn, the bond market's undefeated. It is what it is. That's what their action was, and something had to be done. There's reports kind of denying or diminishing the impact of the bond market reaction on the decision, but you also had Besant saying, yeah, it was kind of part of it. So it's interesting to see how these systems that are, devoid, fueled by human emotion, but really at the end of the day, devoid of it, devoid of politics, just money being exchanged, forcing the hand and forcing things in certain directions based on the will of investors.
Well, and it didn't hurt that China was pounding out U.S. treasuries to drive the yield higher to force Trump's hand. China is a superpower. The U.S. is a superpower. Like, I think they could go, 10 rounds and knock each other out each round 10 times and still keep going with leverage in spot A and leverage in spot B. One of the other crazy things about China is it basically controls all the rare earths, all the critical elements in the world, which the U.S. desperately needs. What are you going to do? And I don't know if you follow Chamath, but Chamath tweeted, he was like, I own a strategic reserve of critical elements, but it takes 10 years to put those into production. So there's a lot of craziness going on. And I look, my view is the capital markets like calm. They like knowing what's really supposed to be happening. They don't like this chaos. You're seeing overreactions everywhere today now, of lots of money being taken off the table. Yesterday was a fun day to watch. I think I saw that someone bought the S&P minis at a penny and made 14,000%. It was the largest gain on the S&P minis ever in history. So
yeah, a lot of those.
that was probably a Trump.
I was gonna say, I'm not. That's a lot of those charts going around where, but it's funny because
how did someone buy all that? Exactly.
Yeah, it's and of course, it's just the world we're in though, where it's kind of like, and then like moving on, sort of. There is once again the push from some members of Congress to bring back the stock trading ban, and I think members of Congress are loving this because they're like, see, it wasn't us this time. It was someone in the White House. We didn't. It wasn't Pelosi. It wasn't us. It was. But that bill in the U.S. has been brought up and co-signed and brought up so many times. And I think it's almost like the way the markets are now. People like a lot of reaction I saw was people just being like, yeah, that's what happens. People have
asymmetric information. Exactly.
So
Nancy Pelosi is the world's best. She's probably the best performing hedge fund in the world.
I also saw a girl, Marjorie Taylor Greene, bought the dip pretty aggressively on Tuesday as well. So, lucky she must be an astute trader, in addition to her other talents.
Risk lover.
Between CrossFit reps, she's just making plays in Robinhood. I want to go back to sort of your background. You brought this up, bridging traditional finance and crypto. And we talk about the chaos and the drama and the theater. And I want to hear your perspective on, you think this embrace of crypto in the U.S., and you mentioned us being sort of behind the curve. Do you think this is a permanent shift, or is it just theater?
Oh no, this is a permanent shift. You've got bipartisan bills led by Senator Loomis sitting in front of Congress. You've got Lutnick, who is looking I know what the bill is trying to do. They're trying to ensure that the U.S. buys 200,000 Bitcoin, I believe it is, basically every year. But the reality is there's several data points. One is, if you're paying attention to Germany is trying to repatriate all their gold from the U.S. as part of this trade war. I don't know what's in Fort Knox. No one does. If Fort Knox has the amount of gold that it says it has, but it's never been audited, at least to the best of my knowledge, ever. So is it there? That's one question. Or is it all just paper contracts now? Because if you actually get a situation, if I was thinking strategically here, Lutnick, Trump, and everybody, I'd be picking away at Bitcoin and buying the crap out of it. You know that Russia is using it to get around any embargoes and buy oil and gas. why don't you make it more expensive for them? I'm missing a piece of their thinking from a strategic perspective. Like if they're acting like a fund, they should be buying now. So my view, permanent. This is an opportunity for people to make life-altering wealth still, because the U.S. has just barely started. We're going to refile our 40F here any day, and believe, just like Galaxy, that we'll be uplisting in the very near term on the NASDAQ. And those are huge catalysts for companies like us and for investors that watch this show, to get a bit ahead of the curve, because typically when companies get on the NASDAQ, they move substantially higher because the Canadian markets are absolutely horrible. Our regulators are terrible. They don't enforce anything, basically. So you end up with shorts just everywhere in Canada. That's the reason why no one invests in Canada. But then you get this move to the NASDAQ, and you'll, like, DeFi should at that point start trading at 20 times earnings like every other company. And we're trading at 7 in Canada. So it's going to be a really like, it is permanent. What are you going to do about it? 98% of the world still hasn't bought crypto.
Yeah, you talk about the government buying up crypto. What do you think about like GameStop strategy adding to their balance sheet, Bitcoin, other assets? Do you have any opinions on that?
Well, if you look at the way the U.S. is playing this, they want a weaker U.S. dollar. Why hold dollars? The U.S. dollar is being devalued. Like, this is most Americans don't understand how badly their currency has been managed, because traditionally Americans holiday in America, right? It's not. I mean, yes, the uber wealthy or whatever go elsewhere, but your dollar has been devalued. I think it's something like 88% over the last decade. So you're sitting with U.S. cash, and you have an option to buy an appreciating asset, whether that be gold or Bitcoin. Why wouldn't you? We're doing it. We have close to 40 or 50 million in crypto on our balance sheet, just because we have more faith in crypto than we do traditional fiat currencies, and that's the reason why our company exists. We want to give people the ability to get access to these protocols, the Apples, the Amazons, in early stages of their evolution through a traditional ETF structure. And we have a view, our 10-year view is that Bitcoin's 500,000. Like the minute this starts, and all the writings there, that's the other thing that always confuses me. Like, all the writings there, I don't know why people aren't buying into it. It's really quite unnerving, weird, because, as you know, I'm super long DeFi, and all of the team is super long DeFi, and we're like, this is so obvious. But what is everybody else missing? Like, when are people really gonna start buying? And actually, I shouldn't say that. Like, Van Eck just bought 8 million shares of DeFi 2 weeks ago. So it's not like people aren't doing it. It's just, you've got these predatory algos pushing it lower, and then you get these big funds coming in and buying 10 million shares. It's wild. So
Yeah, it'll also be interesting to see once we get through sort of the haze of the tariffs, hopefully, get back to, I think a lot of companies sort of went into, you said people setting up war rooms, like resources, brain space allocated to solving the realignment of their business potentially, or how they're going to change their strategy in this section of their business, and maybe they put the crypto stuff to the side. But what you're saying, it sounds like you don't think this big picture, it's not priced in at all yet, because you see it going.
No, this is weak. In my opinion, it's a weak Bitcoin environment because of the global uncertainty, and if you're a large hedge fund, Citadel, or these massive multi-billion-dollar funds, there are ways of shorting Bitcoin that reflect on the price of Bitcoin. So I think you're looking at, and I said this maybe 4 years ago, I was like, the advent of the ETFs and the futures is actually going to stifle crypto growth, because it's what they did to gold, right? Any of these alternatives to currencies are not typically embraced by governments, or at least aren't embraced by non-intelligent governments. Like, if you look at China's been buying tons of gold and controls tons of US treasuries. And the minute they start buying Bitcoin, it won't matter what Trump does. It's a really interesting global framework, but for me, this is one of those ones where you just sit and buy good companies that are making cash flow and you just wait. And that's what DeFi is.
Yeah, echoing a lot of what Shay was saying. We're coming up on the end of the hour, but I do want to talk about gold because we
Sure.
talked about gold last time. And I think last time we were here, we were like, oh, they're going to go to Fort Knox and check it out. What happened? I don't know what happened to that. I guess they were going to live stream it. I feel like there's a lot of like, it's like when you're watching an episodic TV show and there'll be like a part of a plot introduced and then you'll never hear it again. And it's just like moves on.
It's really confusing. They've done it with Doge as well, right? Like you hear a lot about, this is going to happen and that's going to happen, and then nothing happens.
Yeah.
I mean, we did get the Kennedy. We got the Kennedy files. We're slowly getting some stuff, but it would be. Look, if the problem is there's no real audit trail, and so even if that gold exists, what if 300 billion is Germany's? You know what I mean? Like, again, like it could just be Fort Knox is holding a lot of everyone else's gold. Someone needs to get to the bottom of this so we can understand what the US's options are. Because if Fort Knox exists as it says, and that is the US's gold, what a great strategy to start selling some gold and buying Bitcoin.
Yeah, it's and what you mentioned about Germany, have you heard any updates on was in the height of sort of the tariff stuff? With that cooling down, do you think they're still going to try to claw that back?
I think they're going to try to find out if they can claw it back. It's by no means like this is just a 90-day hiatus.
Yeah.
This isn't it's off the table.
Yeah.
If I was a government, I'd be like, okay, fine, we don't need it today, but I want to know it's there.
Yeah, we'll be there in a few weeks. Yeah, we'll be there with our cameras.
Yeah.
And Russ, it's always amazing to have you on. I feel like every time you're here, it's only a couple of weeks, but like the world changes. So like, who knows next time where we'll be? I think you closed on an important note, which I think we're all feeling a sigh of relief today. It's a 90-day pause. I think the relief is because there's a glimmer of hope that this is somebody who is open to changing their mind, maybe, which we were not sure of before.
Yep.
But 90 days, anything can happen. Look at this week to next. So we'll have to make a list of things to catch up on next time you come back. And quickly remind people where they can learn more about DeFi and follow you guys.
Yeah, so it's defi.tech, www.defi.tech. You can find our deck, you can see our financials, you can see our team. I've already given some of the background, but that's the easiest way to do it. And then if you're looking to reach out to me directly, it's rstarr, STARR, as you can see with my name, at defi.tech. And I tend to try to answer everybody's emails or calls. So it's always open to chat.
Great. Well, good luck out there today. Stay alert, stay focused. We will see you guys next week back on the Daily Rip Live.
Thanks a ton.